Welcome back to the channel Trading Simplified. I'm a trading enthusiast and love to simplify trading. To get started, just a reminder that I'm not a financial advisor and this video is for entertainment purposes only. What's up, everybody? So today we made $1,800 today, WBX, and I traded them in the $29 range. And this is why, with day trading, it's scary because you could see that if I didn't get out of this trade, I'd be dead meat. And I'm even trying to show where it was, but I guess because it's already been like a half an hour that it's tough to see. But I traded this in the pre-market before 9:30. So before 9:30 is where I made the money. I'm going to see if I bring up Webull, it'll actually show it a little bit more in detail so I can break down the trade. So I was just checking on Webull and it won't let me actually show it. But it was around these candles up here, in between this $24 up here and in between the high of 35. The momentum was going up, so I just bought and then wrote up the momentum. Sometimes when it's just continuously green, you get the three horsemen right here, which is all green candles, and the volume was 230,000, 244,000, and 286,000. In the pre-market, I like to trade if the market is very bullish because you get these wider swings. So I was able to just place the order in and just it was within 4 seconds I made the money. So I just placed the order around like 29 and sold it around 30. So it was a nice gain and it was quick. So that's why I like trading pre-market, because you get bigger swings and you can get wider spreads. But I just wanted to bring up something else for anybody that is owning this stock. I traded them, made money on them the other day, but this is a company that, I think it's FUN, F-U-N, I believe it is. I just want to bring up that just be careful with these guys because the stock was always trading around $1 and now they blasted up so high, the company does a share offering, which means they're going to dilute the stock up to 48 million more shares, and that's going to cause the stock to plummet, which is what you're seeing. So you see it was at $7. They offered this news at 9:33. So let me get this out of the way so we can see. So they offered at 9:33. And I'm just looking at the time here. Look, so you can see here's the time. At 9:33, look, it just sold off from $7 all the way down to $4. So if you're stuck holding the bag on this one, this is something that, I mean, you got to follow that stop loss, unfortunately, but I don't want to tell anybody how to trade. But once you see that news of share offering, if you're not shorting the stock, it's time to get out of the trade because it always sells off every time a company dilutes the company with more shares. Just something I wanted to bring up. Another stock that I sold my call option on. I'm only holding one put option now on Ford, but I sold the PLTR call option that I had from a week ago. So right now I'm pretty much holding nothing but only a Ford put, and I sold it around here when it was at $26. So a little bit early, but that's okay. I'll take the gains. And then Ford, they have earnings coming out. So I decided to buy a put option when they were at $16. I could have just broke even on them, but I'm just going to hold it. It's a $102 put option. It's nothing crazy, nothing to write home about. I'm just still getting used to options, so I read a lot of videos how you shouldn't go heavy and you just need to practice to learn how to get better. So I'm just going slow with it. With the day trading, I'm way more aggressive because that's what I'm comfortable doing. But with the Ford, I have it at $16, so I'm hoping that this thing sells off to $15 after earnings. But we'll see. There's so much news about Ford doing well and combining and electric vehicles. I'm probably going to lose that $100, but we'll see what happens. And then the other company that I want to bring up was, I think it's DWAC. I traded them. Actually, I didn't. This is the trade I missed. But I just want to show you, when you get lucky, or you bought something and it goes up to the moon, you really need to just assess whether you should take gains or not. Because 5 days ago, this company was worth $175, and they went all the way up to here, up to $175, and now they're all the way back down to 67. So anyway, it's holding. If you had them in the $10, $20 range, I know you want to hold them forever, but when you make these crazy gains, just take the profits and then look for a new entry. Because at this point, I mean, it's $67. It may come back, but it's all wishing at this point. So I'm always, if the money's there, the gains are there, I take it. So a good example was, let's go to last business day. Hold on, it's lagging for some reason. There we go. So last business day, I traded BKKT. Great example. And I only had 21 shares at 9.35, and I sold my last share around $40 this morning because it looked bearish. But like, this is my, I could be wrong. Maybe in the future it's up, but I'm going to take the money as I get it when it comes. And this is just to show you, just to give you a good example. Looking at BKKT, it was trading at almost $60, $57 a share, and I sold a few shares around 55 to 57 because I was happy. I was like, I made my money. I made $400 off of a $200 investment, but look, if I would have held on to those shares, I could have had the opportunity to sell at 55. Now it's like $27. So you just sometimes got to look back at these companies that explode and look where they used to trade at. And this trade it was just $10, So that was a nice one. But then when you go to DWAC, this company, same thing, used to trade at $10. It's risky. And then another example is, where's fun? Because that's a better example to show you that, when, if you're lucky enough, you got some shares and you're up by like a huge percentage, start shedding off, pay yourself. You deserve it. You picked the right pick, and it's time for you to be rewarded. Because look at fun the last 3 months. It was worth 84 cents. Now, some people who didn't follow stop loss are holding this stock at a high of $24. I can see the high here. Now, let me just make it just a little bit easier to see. I'll put it on 2-day. You can see at a high of, put it on 5-day then. You can see it at a high of $22 up here. So, when you have profits and you sell too early, that's why you got to have the target in mind of what you're going to be buying and selling at. And if you get more, that's fantastic, but don't beat yourself up if you sold too early because you had the right entry, you got in, and you made the money. And it's the same principle that I was trading. Where is this company? I think it was like, I don't even know the symbol anymore. Hold on, let me go back to the... It's funny how quick we can forget the symbols here. Hold on, let me just go back to it. When I go back to WBX, I know nothing about this company. I don't know anything. I just know that it had a positive catalyst with Uber, and it was rising up. But here's a great example. Let's take a look at it. I'm not going to hold on to this just because it has a good catalyst. I'm going to play the momentum that is rising. And look, it's $16 right now. So if I would have held that at $29, I'd be down 50% of my investment. So when you're making these big day trades, you got to just in and out, and don't overstay your welcome. Be grateful for the gains you can get. Look, I could have sold at 35 apparently, but I'm happy. That's plenty of money for me. And I'm smiling at the end of the day, and I'm going to enjoy the rest of my day now. But, if I would have held and said, oh, it's going to 100, it just sells off. And sometimes that does work with stocks like AMC and I guess, DWAC. But I just don't think you're going to be able to trade long term if you're doing that kind of trading, because not every stock is going to blast off to the moon. And if it does, that's fantastic. And you just take whatever gains you can get. I mean, the last 2 days, I was up 400 the other day and 1,800. So 2,200 in 2 days, not bad. And this money was made all in the pre-market. I made this before 9:30 in the morning. So, I mean, it's a good start to the day. And I'm done trading for the day now. So, I just wanted to bring this up. You got to follow that stop loss. When you enter, you got to know your risk, know your reward, know what you want to make, and have it all predetermined before. When I went into WBX and I bought at 29, I knew I wanted to sell at $30. So, even if it went up higher, I was already taking the gains. And look, if it looks weak, I get out. I take the loss. So, I just wanted to bring it up. Something to think about, and you got to protect your wealth at all times. Do not hold any stock. If it looks weak, it probably is weak. It's probably your mind telling you that it actually is weak. I was looking at JBlue as well. They did good on their earnings. I bought shares at $14.78 and I sold them quick because I was playing a different stock, to be honest. So I just sold them real quick. I would have got a nice 10 cents, but they don't move that fast. When you're day trading, you want stocks that move quick, because if you're doing a lot of shares, it's nerve-wracking to hold on to something and you don't know where it's going to go. So, I mean, you could hold on to it and then you don't look, and then it sells off because the company does a share offering like Fun or something. So I'm just saying, beware of stocks like Fun and WDAC. Like, just be careful. They can really sell off, and you don't want to lose your whole investment just because of the hype. AMC, I'm still watching. I didn't buy them at 35. That would have been a great, fantastic buy. But just again, I would have bought them at 35 and I would have sold at 36. It wouldn't have been a long-term hold. But it's just something to watch. We'll see where AMC goes. I think AMC is selling off because we have all of these other companies exploding. So people are just selling their shares and they're going to things that are actually moving. Because whatever's moving is where the money's going to go. Because that's all traders are really looking for, is where's the momentum, where's the continuous green candles. But that's all I wanted to bring up for today. Just wanted to show my trade for today and yesterday. It was nice. I wasn't at work. I could sit at home on the computer and actually trade, and what a difference it made. But they're not always like this. Sometimes we lose. So like Tesla, I lost on because I shorted those shares at 856, and I had to cover at like 900 because look, it's already at 1082. Imagine I held on to those shares, I would be down like double the amount or triple the amount. So it's just something to think about. You know, when you follow your stop loss, you got to just cut the loss and call it a day. Because look, sometimes you're off. You think something's going to happen. Even the RSI is 80 right now. It doesn't matter. Nothing can stop Tesla right now. Give it a month or two when everything turns red, then it'll sell off. But right now, you just got to follow those stop losses and stick to your keys. You can always go back to my other videos where I talk about RSI, I talk about stop losses, and I talk about following and just having a plan whenever you make your trades. You should never just buy for FOMO. You should always have a plan. So just wanted to give you my 2 cents. If you want more details, definitely leave a comment in the section below, and I will definitely make a video that can help. Sometimes I'm just not aware of what video to make, and if you bring it to my attention, I will definitely make a better video.